Well, things have changed. I mean, when you have gold go from 2,000 to 5,500 or 5,600, and now obviously back to the low 4,000s. Silver go from single digits to 122, and now back to 60. That big rise up in the prices of the metals, even poorly managed miners figured out a way to have cash flow, and they've had probably their best cash flow in this last year. The reports you're getting there are actually really good, and they're really cheap stocks on the basis of where they are now and where they're going. My silver target is 200. And that's for this year. My gold target is, and again, I don't do calendar year. It doesn't have to be by the end of the year. I think it will be, but it doesn't have to be. Gold, my target is 7,000. And again, as I said before, I have a 20,000 target on gold for the 2033, let's say, and 1,000 target on silver. Silver. So this isn't the top for them. This isn't the end of a secular bull market for them, but they will get hit in the bust. But I do think we just made major bottoms in both. They spent the last 6 months unwinding all that speculation that happened in January, December and January. They had such tremendous runs, particularly silver, in those couple months, and people jumped on the bandwagon very late. I've been a big bull on gold and silver going way back several years. A lot of it was ignored until this last move. And all of a sudden, again, as I mentioned earlier, the tape is what draws people into things. And they had such a tremendous bull market tape in those. You sucked a lot of weak hands people in, and you've spent the last 6 months unwinding them. And they've thrown in the towel. I think we got the bottom a couple weeks ago. And we've been kind of building this short term, trying to shake out whatever's left of people who are hanging on. And as of this week or as of the last week, we're starting to turn the corner. And I think you're going to see. It doesn't have to happen this way, but silver could go from, silver went from, 35 to 122, and basically went from when it broke out above 48 or 50. Went from there to 122 in a few months. You could have a steeper run this time. Even doesn't have to be, but it could be where you go from 55 was the low a couple weeks ago. You could go to that 200 and get there in 2 or 3 months. And so my view is that the miners, as a result of that big run up in the metals I see coming, will in many cases for gold. I'll use GDX. I think GDX is where it's at now, maybe 95. I don't know. I'm calling for GDX to go to I think 180, and GDXJ to go to 250. So those are probably 2.5 times. The silvers, SILJ, which is got down into the 23.4 area. I don't know where it is today. I'm calling for that to go to 90, so almost a quadruple. And a lot of the minor stocks, I think you're going to see that triples and quadruples. So to me, it's an area where people got pretty discouraged over the last few months because they just couldn't get out of their way. They kept going down. But that they have to look at the whole last couple of years and see where they came from. And I think we came down to a very sweet spot where they are turning the corner again as we speak.
You have 53 years of work and you're sticking to your guns. You might be right. Timelines, well, they do adapt somewhat, but you haven't backed down. Tell us a little bit in terms of your perspective, how I phrased it, why you feel this way, and it's important for you to get this message out. You don't have a fund. You don't have a truly significant financial stake in it. Yes, I'm assuming you have some subscriptions and things like that, but relatively you're not doing this from your own monetary perspective. You really believe it. Why? And is there anything that could change your mind?
Yeah, first, I'm retired, so I'm 74 years old, so I'm not worried about a legacy or none of what I'm putting out there is anything but what my analysis suggests should happen. That's one of the reasons I've got 400,000 followers. I believe is because people know that I just speak what I see. I'm none of this is gamesmanship or trying to be remembered for something. It's none of that. And frankly, I've in my career as a money manager, et cetera, I made big calls in '82 and in '93 and in 2000. This one obviously is a game changer. 2008, I was in September 2008. I was one of the very few out there talking about a hard landing, and almost every economist and strategist out there was saying soft landing, no recession in sight. We were weeks away from the biggest financial crisis since the Great Depression. So that shows you how this stuff can unwind fast and happen fast. But basically, I'm looking at my analysis and I'm putting out what I see. Can I be wrong? I sure can be. Am I worried about the fact that this might not happen the way I say it? Well, obviously, I don't want to hurt people, and I don't want people. I'm not putting out anything that I don't believe, but people have to understand these are forecasts. It is the future, and things don't always. And it is an extreme forecast, so it may or may not play out exactly that way. As if my analysis suggests otherwise, I will change as we get there, and I think I'll be able to change it ahead of time for that. But just like I have adjusted on the bull market that I thought could have ended a couple of years ago and stretched it out. Again, it's not a game. It's what my analysis says. If my analysis says this thing continues, I'll be continuing. But as I see it right now, we're coming to an end of a major secular bull market that's longest in my lifetime and your lifetime by far. And what follows that, I think, is going to be very unpleasant, but we'll see.
You being a macro person and an investing person, now again, they may have 100 million, a billion, they may have hundreds of billions. So dealing with tough times over multiple years may be something that they have the strength to pull through. Now, we could get into a deeper discussion on be careful with a major bifurcation of haves and have-nots. Remember the French and Russian Revolution. Both you and I are relatively fluid in history and philosophy. You hinted at some things earlier, which I didn't even jump onto with Mao and things like that. Like, look at how many tens of millions of people died because of communism with Mao. But go back and listen to my 2 solos where I talk a little bit more about that. What would be a message specific, I know, to a very small subset of people, the single family office principal, rising gen executive, relative to what you're describing, whether it's a macro take, a commodities take, an investment take? What would you have them like to walk away with?
Yeah, probably right now, because of where we're at in this cycle, this is a message I give to in many of my interviews. But basically, understand how far we've come. Know yourselves as money managers, and basically, my forecast doesn't say stay right to the top because I know where it's going and get out. But what I have said is we've spent since the mid '80s. The financial industry has pushed this mantra of it's time in the market, not timing the market. If I'm right, and I'm at least on parts of this, I have lots of conviction. We are at a point where rules are made to be broken, cliches are made to be proven wrong. There is a time when, and those who followed that mantra of time in the market, meaning just keep dollar cost averaging or keep putting your money in the market because it always goes to new highs. we may be at the end of that, where timing the market is going to be the biggest story going forward, at least right now, where sometime in the next several months, if you stay with the mantra of it's time in the market, I'm not smart enough to time the market, so I'm just going to stay fully invested and ride it through because next cycle will be higher. As I said, this secular top may not be revisited for decades. And so it really does behoove people, particularly professionals managing other people's money, family offices managing their own money. It behooves people to understand that if we're looking at anything close to an 80% bear market, the way the math works, you can have a great cyclical bull market coming out the other side for a year or two and get half your money back or 2/3 of your money back. But I doubt you're going to get all of it back unless you obviously can change horses and do it maybe in commodities. But I think this is one of those rare times where, particularly in the last 40 years, where it does make sense to say, I'm going to cash or I'm going to treasuries or I'm going to something that doesn't have the volatility, not necessarily today, because I still think there's 30, 40% upside. But in this period, take advantage of that strength and understand that capital preservation is going to be your number one goal for the next year. And then on the other side of that, there'll be great opportunities in different leadership. But then you're set up in big ways. If you just ride this through and say, well, I learned through 40 years of lessons that we always come back and you should not bet against the US, this is one time where that may not work out for you.